Reporting to stakeholders. Part A. Discuss the factors that determine organisational policies on reporting to stakeholders, including stakeholder power and interests. Because we are now able to use Mendelow's matrix to determine the level of interest and power of each group of stakeholders, we can then look at how to implement company policies based on the results of the model. A company will have a fiduciary duty to its stakeholders regardless of their position in the matrix. Fiduciary duty simply means a duty of care and trust towards stakeholders. Because the organisation will have a very diverse and extended set of stakeholders, problems may arise in dealing with conflicting claims. Companies may use two different motivations to consider stakeholders, the first one being the instrumental view, that only considers the economic value added of dealing with said stakeholder claim, and the second one is the normative view, which implies that the company has a moral obligation to its stakeholders, regardless of the economic impact on the company. Part B. Assess the role and value of integrated reporting and evaluate the issues concerning accounting for sustainability. The Integrated Reporting System, also called IR, is a framework that companies may use to report to their stakeholders on the performance of the company. The particularity of the integrated report is that it does not only measure financial performance, but a basket of variables that are part of the company's environment. The variables are financial, manufactured, human, intellectual, natural, and social. These variables are called capitals. The purpose of the integrated report is to encourage the company in more sustainable decision-making and investments by highlighting its use of resources. On the other hand, this also helps investors to get a clearer picture of the sustainability of the business, something that would not be present in traditional financial reports. Integrated reporting is not a shaming device, but rather a value creation report. Part C. Advise on the guiding principles, the typical content elements, and the 6 capitals of an integrated report, and discuss the usefulness of this information to stakeholders. Let's go over the 6 capitals of the integrated reporting framework in more details. The financial capital measures the funds available for use in the company. Details will be provided on the source of these funds, such as loan financing or earlier profits or cash flow. The manufactured capital will measure the physical items that are used in the supply chain of the business, such as widgets or entire offices. The human capital represents the staff or outsourced labour and their respective skills and experience, and the value it brings to the company. The intellectual capital represents intangible assets that give the company a competitive edge, such as patents, goodwill, and copyrights. The natural capital is simply the commodities and prime resources used in the production of goods, such as unprocessed wheat, oil, precious metals, or water. The social capital represents the collective of people involved in the company as a whole, and the company's position in society. The guiding principles of the integrated report are the following: consistent and comparable presentation with other organisations and over time. Connectivity across all relationships that create value. Conciseness to encourage consumption of report. Stakeholder relationships and how they work to create value. Reliability and completeness, avoiding any bias. Materiality, disclosing those matters that substantially affect value creation. Part D. Describe and assess the social and environmental impacts that economic activity can have in terms of social and environmental footprints and environmental reporting. Sustainability is the concept that companies should limit the use of scarce resources under the level where these can be replenished, or in other words, companies should only use the amount of resources that allows for those resources to sustain. The environmental footprint of a company is a measure of the impact that the business activity has on the environment's resources and pollution. Greater responsibility is required now to companies to report on their environmental footprint. Part E. Describe the main features of the internal management systems for underpinning environmental and sustainability accounting, including EMAS and ISO 14000. The Eco-Management and Audit Scheme, also called EMAS, is a voluntary program that pinpoints targets and improvements, inspections, reporting disclosures and verification. In order to register for EMAS, a company must follow these requirements. The company must have an environmental policy in place that is in compliance with legislation and achieve performance improvements. There must be an on-site environmental review. There must be an environmental management procedure following the environmental policy previously mentioned. On-site audits to be conducted every 3 years. Said audits results to form the next objectives and revision of the policy. Another environmental framework is the ISO 14000, which is a basic framework compiling a number of specific standards. The standards are the following: an environmental policy statement, which should be the basis for future action, assessment of the environmental aspects and legal and voluntary obligation, a management system ensuring effective monitoring and reporting on environmental compliance, internal audits and reports to senior management, a public declaration that ISO 14000 is being complied with. Part F. Examine how the audit of integrated reports can provide adequate assurance of the relevance and reliability of organisation reports to stakeholders. Integrated reports will be subject to audits, which will be referred to as social audits. The audit of integrated and sustainable reports will provide assurance that a company has achieved its targets. In general, the audits will be conducted to review the following areas: the rationale of the company towards social issues and sustainability, to make sure that all the sustainable programs are in congruence with one another, to review the objectives and priorities of the environmental policy, to evaluate the company's involvement in the systems put in place. On the topic of the environment, environmental audits will be conducted which are slightly different than social audits. Environmental audits will primarily focus on the protection of the environment and facilitating compliance with policies and regulations. These will be made in 3 stages. First, the different metrics and KPIs will be determined to conduct the audit. Then the metrics and KPIs will be measured against other companies or past performance. And finally, an audit report will be produced with the varying levels of compliance indicated.